The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the January 26th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day out there. Let's make sure that you and I, that we do everything we can to have a magical Monday, a marvelous week out there. Of course, let's always remember what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible. But here's the key, and this is what I love. What's scheduled is real. And I want to thank you for scheduling your time with me. I am grateful for your presence here today. I'm here to serve you. That means just give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. That way you and I, we can go hunting for bulls and bears, for buyers and sellers. Remember, if you've got a question, somebody else has got that exact same question. So don't call in for yourself. Don't call in for me. Call in for somebody else, and that's a random act of kindness out there. This is Magnificent Monday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got the Dow trading off about 36 points right now. She's trading at 17,636. Deflategate. Somebody let some somebody let some air out of the market at the open, but it looks like they're pumping that air back in there. You've got the S&P down 3 points, trading at 2,049. Composite off 5 at 47.53. Russell 2000 just turned green out here. The DAX up 100 points. The FTSE down 3. Goldilocks is off $14 this morning. Silver down 27 cents. To the upside, you've got Midwest VACO. That's a buyout or an agreement to combine with Rock, Tennessee. Both those are up 18% and 11% respectively. You've got Roper Doper. You got the Rope-a-Dope. Roper Industries, ROP, is the ticker symbol, up 5%, up $7. Intercept Pharmaceuticals, ICPT, that's up 8%, that's up $8, up 4.5%. Wynn Resorts is up nicely, up 5%, $6.70. Universal Display having a heck of a move this morning, up 19%, up $5.33. To the downside out here, you got Western Digital and Seagate. So the hard drive companies are getting hit. They're getting hit hard out there. Thank goodness they like giving away their products during the holiday season out there. Maybe they're still giving away. They're down 8 and 11%. Respectively. Granger Worldwide down $5 off 2%. Energy Transfer Partners off 5%. Priceline off $3, no big deal. Brookdale Senior Living off 9% this morning. UPS down another $2, $2.60 right now. It's trading out at 100.29. Again, our call number 877-927. 6648. Let's start off by taking a look at the index ETFs out here. Let's start off by taking a look at the Dow Diamonds. The Dow Diamonds off 33 cents, 1.2 million shares so far this morning. What do we know about the Dow? Well, if we take a look at the Dow Diamonds, really been just simply trading in a sideways consolidation. We take a look at the Dow Diamonds. Don't do this to me, this cursor thing. Well, let me try a different page. Okay, let's try a different page out here. See if I can do that. We were in the diamonds, and if that doesn't work, I'll come back, and there we go. I got full use of my cursor here. Okay, so now we take a look at the Dow Diamonds. Let me do a couple things here. Let me get to access so I can turn some things on and off easily on my charts. There we go. Okay, if we look at the Dow Diamonds, what we know is that it broke out on October 31st. No, not any big, huge volume or anything like that, but 7.5 million shares to the upside. Now, that October 31st, again, I believe that's an important level for us to be paying attention to because it's a combination of both when the bank finance ministers in Japan said we're going to print more, and also because of the major shift in the pension fund management for the Japanese government out there, and that they were going to go ahead and change their allocation formula, and that opened it up substantially to a significant. I wish I'll have to go back and look at it, but I'd have to just really go back and read my newsletter from October 31st out there. or maybe it was the following Monday, whenever it was. In any event, here's the deal. The diamond's been trading in a consolidation between the 172 to 180 level. So you got about an 8-point consolidation out there inside of the Dow Diamonds. We know that the Dow Diamonds have tested and rejected the swing point from December 16th. They've done it on a number of occasions, and they've done it with light volume. That had 12.2 million shares. It was tested back here on January 20th with 7 million shares. The next day, 6.2 million shares. And finally, on January 22nd with 9.5 million shares. Tested and rejected. Its work to the downside is done. Done with, over, doesn't need to do any more work down there. Now the next piece of work is up at the upside. This is getting back to the swing point from December 26th and that 180 level. Right now you're trading at 176.03. And that's what's going on inside of the Dow Diamonds. If we take a look at the QQQ ETF, that's off about 32 cents right now. Volume so far today, wish I could tell you, 5.6 million shares. I can't. I just have to look. What are the Qs doing out here? Well, the Qs, they have actually tested the low of that December 16th area. So they tested that. That had 65 million shares. The Qs tested it with 35 million shares. So you got the bottom of a swing point. Unlike the diamonds, when we were taking a look at that, that's only tested the top of the December 16th area. So you got the Dow Diamonds have tested the top and rejected it with lighter volume. We've got the Qs, which have tested the bottom and rejected it with lighter volume. Now what the Qs are doing, the Qs are just simply making a run for the 106.25. That is November 28th. That only has 17 million shares out there. On Wednesday or Thursday, you were up with 40 million shares. On Friday, even though the general market was pulling back, the Qs, not so much, 34 million shares. Yeah, it's got to deal with the little junior swing point from December 29th. That's only got 17 million shares out there. The Qs on their way to the 106.25, and then they're on their way to 115.37. That's the QQQ ETF. Let's go take a look at the Russell 2000. The IWM is flat as we speak right now. Now, in the case of the IWM, if we take a look at and use that December 16th area, December 16th is its swing point low, stronger than the Qs. Strong, and it also was tested and rejected with a lighter volume. December 16th, 62 million shares. That level was rejected with 41 million shares. It was rejected with 36 million shares, rejected with 27 million shares on January 21st, and then that final rejection coming in here on Thursday last week with 37 million shares. So the work to the downside is over with inside of the IWM. Now the IWM is going to make a run for that 120-ish level. The specific swing point it's targeting is December 29th, 121.38 to 120.61. Volume again today, so far about 5.7 million shares. That leaves us with the SPY out here. Let's go take a look at the SPY, down about 0.2% this morning, off 38 cents. What have the SPYs actually done this morning? Just come back and test their 13-period exponential moving average. The SPYs, the same kind of thing out here. They have tested and rejected the December 16th. Not the low, but they have rejected the high. And at 259 million shares, even as price got in there, it got in there with 209 million shares on January 6th. It got in there with 192 million on the 14th, 176 on the 15th, and then 211 million shares on January 16th. And then voila, decided to reject it with a test on January 21st, 122 million shares going against 259. The work to the downside inside of the SPYs is over with. And now the SPYs want to go test the swing point high from December the 5th out here. December the 5th is 208.47. So that's a level. They also want to get back and test December 29th, 208.97. So that is the range. That is the level where now December 5th, I think, is more important because it's got the volume of 91 million shares. So when the SPYs take on that area, you want to see it get above that 208.47, do with more than 91 million shares. That would then set up your A to B equals CD to the 224 level. If, in fact, you're coming into that area with light volume, then we got kind of a consolidation going on between 197 and 208. Either of those are likely outcome before we see another run for those lows. If at all, we see another run for those lows for the rest of this year. That's what's going on inside of the general ETF structure out here for the market, meaning the index ETFs. Let's go to Mike in Pennington. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Good. How are you doing today?
I am doing excellent. Thanks so much for asking. And you wanted to take a look at Zillow, I believe, ticker symbol Z. Tell us what you're doing, what you've done, how we can help you.
Well, we had the earnings on Friday morning. I got two calls Friday morning that expired Friday, and I got two more that expire in February. And I'm looking at the 115 area, and then it looks like it gets to 120 maybe.
Yeah, I think so. You know what? You had some nice action on Friday because you had some volume behind the move out here. So inside of ticker symbol Zillow. Now Zillow had a kind of a high volume-ish bar down. Let's actually take a look at Zillow. Let me do a couple things. I want to turn this off. Let's just look at the blank chart. So let's start with that. And what it looks like Zillow actually did here, Mike, was it tested, you already know this, but for our other viewers out here, what Zillow actually did was it tested a swing point low from November 6th that had 4.5 million shares, and it tested it with 2.3 million shares on January 7th. It tested it again on January 20th with 1.1 million shares. Now, the candle on January 20th was a hammer candle. The candle on January 7th was a bullish engulfing key reversal session. So the bottom has been tested. Bottom is telling you that that there are buyers hanging out there. So that's pretty good. And then, as you say, with earnings on Friday, you have a sign of strength inside of Zillow. And now it does look to me like what it's doing, it's going to head to that January or November 19th swing point in the 120.65 to 127.89 area. I don't see any reason for it to not do that. Now, what I will also say in the case of Zillow for you, and this maybe helps your trade, doesn't help, I don't know that it helps your February calls per se, but Zillow has a high volume untested high from July 28th, 2014. May hold it from the standpoint that maybe you want a couple hundred shares, I don't know. But that's where Zillow's actually headed to, is the 164.90 area.
Great.
That's,
I'm also looking at.
Go ahead.
Yeah, that's what I'm looking at too. I'm also looking at GoPro. I don't know if you have time to look at that.
Yeah, sure. What's that ticker symbol? What is it? GPRO?
Yeah.
GoPro out there. Now, GoPro, they just signed a deal with the NHL. I saw. Did you watch? Are you a hockey fan?
No, I saw they were all over the skiing, the Olympic trials or something.
Oh, were they? Okay, like the X Games thing or something like that?
Yeah, they're advertising on there, and they show the people, the skiers using the GoPro cameras a lot.
Oh, okay. Now, in the case of GoPro, are you long? Or are you? What do you tell me what you're doing here?
Yeah, I bought. I'm long 2 call options.
Okay. So in the case of GoPro out here, we've got limited data to really work with because of its IPO back in June. We have some data, but we've got kind of limited data. Now, at this stage here, in looking for, in the case of Zillow, for example, we had a nice sign of strength off of the bottom. We don't have that here inside of GoPro. Not to say that it's not the right trade or anything. Just simply we don't have that same look to it. And in the case of GoPro, is it a February call that you've got?
No, it's a weekly call.
Weekly call. Mike, you want to hang on through this break here?
Sure.
Okay, we'll go back to Mike in Pennington. We'll take a look at GoPro, ticker symbol GPRO, trading out right now at $51.19. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 52 points right now. S&P is down 5. We're going back out to Pennington, New Jersey. We're speaking with Mike, and we're taking a look at GoPro. So, Mike, what I did during the break was I went ahead and put a real short-term chart on the screen. So I put a 10-minute chart on my screen. Now, Mike's got the weekly call options on GoPro. And so since the low that was formed back on January the 16th, at least on the intraday charts, I can clearly see that it's making higher lows out there, and higher highs. So you do see a change in trend, that is in place out here. What's interesting, and it's a 10-minute chart that I've got on my screen out here, was that really from the get-go, from that 9:30 to 9:40 session, you certainly had some selling. The biggest 10-minute selling that we've seen in this equity since the move off of the lows out there, and then it accelerated just for a tad here in that next 10-minute session. Probably unless we see this clear the level of 53.18, then there's a chance that low that came in here so far today could be tested. What you really don't want to see it do is at least break some kind of channel. I've drawn a channel line or a trend line off of those lows out there. Not necessarily that you'd exit your trade, because I'm sure you've got the proper money management in there. Good. But from the positive standpoint, it is absolutely making higher lows and higher highs out there. And that's really is there something else that you're looking at that maybe I overlooked out there?
Well, there's the short interest, and I can't believe how many people are telling me they bought the camera. Like people,
Yeah.
I don't even expect it. And they say, "Oh, I bought the I got that camera." I'm like, I can't. Everybody's buying the camera. And
Are you? You mean you and I are the only ones that haven't?
yeah. Now,
Yeah.
I'm waiting for the meeting. I have to wait for the price. I buy used cars and stuff like that, so I got to wait for the price to come down.
Okay.
So I'm
Good.
looking at that, and the other thing is, there's a lot of big short interest, which right now my stop is my call option, so I'm just going to see what happens by the end of the week.
Yeah.
And,
No. And that makes
so
sense. I think that there's basically a supply line somewhere back in January 13th. I don't know. In the 10-minute chart, I don't think I went back that far.
Yeah,
but
they diluted the shares. I won't hold the stock because I know the shares are diluted, but I'm working with the options because I know that I can only risk what I put into
Exactly.
the option.
Yeah, exactly. You think on a real big pop or short interest, 57.21. One other thing, let me do this. Let me turn this on for you. Let's take the TAS signal boxes. So now, from a positive here, okay, so here's the positive side, is that on Friday, GoPro closed above its TAS signal box. Old resistance should become new support. And today it's testing it. That is 51.90. And you're trading at 51.79 out here. So if it can close above 51.90, and you're 51.91 right now. Must be all the buyers must be listening to you, then it says that probably you really do run into some resistance out here at that 57.20 level. So it looks pretty good for your short-term trade.
The other thing I was looking at is the Russell seasonality. Russell is usually the strongest early in the year, and it's been consolidating the last year or two. So I'm wondering if that's going to make maybe that index may make the biggest move up this year since May.
Well, yeah, the IWM. I think one of the things that it has going for it, which you mentioned, is the consolidation pattern. Because in the case of the IWM, I'm just trying to get over to it here. In the case of the IWM, it's got a 13-point consolidation, 13.5-point consolidation. So if it does break above that 120-ish type level, 121 level, you've got another 13 points out there. And you are absolutely correct that, the Russell 2000 in a bullish market will be out in front. It won't. I don't really consider to be the index that's going to drag the market higher, but it will still be out in front. And I actually like the action that I saw here during the most recent pullback inside the IWM. But it truly has been. You can find so many different consolidations within the IWM.
Right now, it's the one that's up. The indexes are down. The Russell's the one that's up. So that's interesting.
And on Friday, the NASDAQ was up. But here's the thing: when we take a look at the summation index for the wider swath of the market, what I also like is the New York Stock Exchange. And inside the New York Stock Exchange, if you actually look at the advanced decline line, I can't do that with this charting system here. I've got it on something else that I got to go access, but it actually had made higher highs on its advanced decline line. Markets don't end like that. They just simply move higher. So the New York Stock Exchange summation index is still turned up. So I'm going with the long market call. All right, my friend.
Okay, thank you.
Okay, I will be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 53 points. S&P is off 5. Composites off 10. Russell 2000 up just a tad. You know, back to the point that Mike in Pennington was making about the IWM. If you're watching this on Tiger TV, the top portion of my chart is the IWM. The bottom portion is the QQQ ETF. And if we take, you know, the market made a significant low back in November 2012. But if we just simply take a look at the peak before that retracement was done, which was back in, so the peak in there was back in September of 2012. If you take a look at the ascent to the IWM's highs out here, and this is where it began consolidating back in March 2014. So we've been in a real long-term consolidation pattern out here. But what you can see is if we take a look at the power, let's just call it a version of the power law vector indicator, although it's not, but just simply the power of the angle, you can see how, you know, the IWM was a leader out here. It was in fact, it was out in front. You know, was it leading the market and pulling the markets up? No, it's really a better indicator, in my opinion. It's a better indicator of liquidity, because when liquidity starts getting tight, liquidity means money's going to go chase things like the Dow. It's going to chase you know, stocks that are more defensive. But when there's plenty of liquidity around, then that money's going to filter into everything, and especially the small caps out here. Well, again, what we do know about the IWM, been in a long-term consolidation. When and if it breaks, whether it's to the upside or to the downside out here, the IWM has a monthly projected price move of 1350. You know, and at this stage here right now, it's trading out at what is it, about the 1118 area? What is it trading at? The IWM Russell 2000 is trading out at 1190. I don't know where I came up with the 18. In any event, so it's trading out at 1190, and it's got a minimum price objective of 1350. That's the break of the consolidation out there, the consolidation pattern. Somebody had. Let me do this. Let me go back to that chart here, because there was a question about trend lines that somebody had sent me a message on. And so if we take a look at trend lines, so now you've got the IWM at the top, you've got the Qs at the bottom, the SPYs in the third window, and the diamonds out here in the bottom window. And that November 2012 level is an important area. I'd have to say that from a trend standpoint, you go back really into the 2011 timeframe out here. And if we take a look at trends, I'll just put this. Let me try to do this here. Let me see if I can get a red line out there. A red line here. And if we just simply take a look at trend lines, come back to 2011, what you're going to see is the trend to the upside here. Now this is based on closes. Actually, it's probably better off for you'll more visually see this if I do this instead. Let me come over to here. Can I do it there? No. Let me try to do it from here. Can I do it here? I think I was running into problems there. Let me try it on this tab here. I forgot to reboot my system. But if we just take a look at the SPY out here, and we go switch over to a longer-term chart. Let's put it on a weekly chart out here. Let me go ahead and get rid of a couple of things on here. Let's get rid of volume. Let's get rid of this. This way it becomes a little bit easier. So now you're looking at the actual candle. So if we take a look at the trend, we're not going to go back to 2009. We're just going to take a look at this trend line from 2011 inside the S&P 500. The beauty here is here's your actual trend line. Here's your plumb line. We can go back and we can take a look at the 2009. It's below this level. But when the market was making that low back in October 2014, you can see what price did was it got right down into that larger trend. So no question, when we take a look at trend lines out here, we take a look at channel lines. It depends on where you're taking, and they're all real. It's just a matter of trying to identify where is price going to gravitate towards when you break a trend line. For those that wanted to use a trend line off of the 2012 timeframe because you didn't take it back far enough, your trend line there in essence was broken, right? If we take a look at that trend line, I make that a green line out here. So if I use that as a trend line, then and this is before that before the October low took place. So here's your trend line there, right? So here's your trend line. That works pretty darn well. The green line. So that's a trend line coming off of November of 2012. And as soon as price broke through that area, which was back in September, October 2014, price came where? Price came right down to that trend line in the S&P 500. Now, if you're asking yourself, hey, how did it hit that trend line? What else was going on? All you really needed to do was to go take a look at the daily chart, because on the daily chart, when price was hitting that area, so there's the trend lines that we were using on the weekly chart. All that it was doing, it was making a Gartley buy pattern, meaning the S&P 500. So we're going to draw on our A to B equals CD pattern, and it made a 1 to 1.618 A to B equals CD as it was hitting the bottom of that longer term trend. So you can use whatever trend lines you want out there. Make sure when you're trying to identify where price is headed to, go back a little bit further on the chart, because if this red line gets broken, as an example, let's switch back to the weekly chart out here. And as we switch back to the weekly chart, if price ever breaks through that trend line, then what we can do is, I'll use this as the white arrow now. So we've got 3 different trend lines. So now we come back to March of 2009 out here. There's where price would likely fall to. So if that red trend line ever gets broken, and someday it will, it's just not today out here, then what you can be looking for is price would likely fall down to that trend. So there's using a trend line off a significant low in 2012. There's using a trend line off of the significant low in 2011, and there's using a significant trend off of March of 2009. The bottom line is that the S&P 500 is still in an uptrend. That there's still work for it to be done. Its work to be done takes you to its consolidation. Its consolidation is this. Let me see if I can actually do this with this tool out here. Now this is where I don't use this tool enough to see if I've got the skill set in using this tool to do that. But here, in essence, is the consolidation pattern inside of the S&P 500. So that is the rectangular area on my screen out here. That is the blue area. And when you and that's a consolidation that's been in place since 1996. Right, price moves up to the top, moves back towards the bottom, moves back up to the top in 2007, moves back down to the bottom that we had in 2009, finally breaks out of that back here with a real confirmed breakout back in July 2013. Now, this is a weekly chart. When you break a consolidation, just like Mike and I were talking about in the case of the IWM, your price move is equal to or greater than that consolidation. So your consolidation inside the price projection for the S&P 500. Now, here's where it gets tricky. Can I grab this box and move it? Let me see if I can do that. Can I move it? Oh, how about that? Look at that. Look at that. Mr. Nimble Fingers. So here is the S&P 500. So we know, number one, we're in an uptrend. And we know that because we broke that short-term trend line, fell to the more intermediate-term trend line, and did an A to B equals a Gartley buy pattern out there. We have not had very many Gartley buy patterns in the move up on the daily chart off of the 2009 lows out there. And the whole purpose behind that pattern was to be able to get in on a trend, as one of the patterns out there, to be able to get in on a trend that is underway. Well, there's an uptrend that's underway, and we broke a consolidation, and that consolidation, if it's going to fulfill its objective, which at this stage here we have no reason to believe that it won't, the question is when, more so than if. And I can't tell you the when, but what I can tell you is that price projection is right here in that 2450 level. So 2450, 2460, 2470, somewhere around there. There's the S&P 500, and what bodes well for it, in my opinion, is what's going on inside the DAX and what's going on inside of the FTSE, inside of the IWM. What we really want to do is we want to really be focused on, and we want to look for some confirmations inside of the IWM or the Russell 2000 to break its long-term consolidation. Because once that does that, once the FTSE does that, then that's going to give you even more of a conviction to be looking for the long side of the trade. That doesn't mean we're not going to have pullbacks out there. Sometimes it's kind of interesting because people will get confused because I've got one outlook and maybe another TFNN contributors got another outlook. The problem is that we maybe have the same outlook on certain time frames, and you know, so it's all really a time frame. In my opinion, it's really a time frame issue that is out there. So when I take a look at the trends and everything that's underway, all we got to do is keep it simple. What are those things also that you can use to keep it simple? You know, I mentioned that summation index. You know, we take a look at the New York Stock Exchange, the wider swath of the market out here. It actually was, of all of the New York Stock Exchange, the Dow, the S&P, the Qs, the NQ out there, the composite, the first one to get above its zero line in its price oscillator, which turns the summation index up, was the New York Stock Exchange. I just really, how good is that out there to get? And then, as I mentioned to Mike, if you actually go look at the advanced decline line on Thursday, as the market had made that move higher, it had made a higher high. It had made a higher high. Markets don't end like that. You end on some types of divergences or what have you. And so the New York Stock Exchange actually has given us a huge bullish signal. Now, what's the issue that the New York Stock Exchange has had out here? It hasn't been able to get above, you know, its highs back here in 2014. But once it does that, what it has done, it's broken above its 2007 high, and that level's been tested a couple of times. So the New York Stock Exchange, if you're wondering what happened in the market here this morning, you know, here's an easy way. If we take a look at trends and channels, again, this is a short-term one, right? This is a short-term price channel out here. But if you take a look at the S&P 500, this is our 5-hour energy chart out here, brought to us by Saratoga Bob inside our Tiger's Den out here. We take a look at this rising price channel. Those are the blue diagonal lines going across my screen out here. Price this morning got down and tested the very bottom of that price channel before it has rejected that level. Now, the cool thing about this, we got Basil. He'll be up in about 15 minutes or so. The cool thing actually about this 5-hour chart is that if we come from the low out here at about, this is around the 2300 hour back on January 15th, to the high that was put in here on Friday, January 23rd, you made that 7th inning stretch up pattern. That's that wave G. You got a nice little bear sash candle out here, so you got a bearish reversal signal, and price pulled all the way back down into the top or the bottom of that rising price channel. Last night, it got down to 2026, and that's when I was just shaking my head saying, how does this work? Now, the long-term subscribers know what that 2026 level is, but it is amazing. It is absolutely amazing when you're trading the S&P futures out there and trading the market. So price so far. Now, here's the cool thing. I didn't get a chance to really finish up. What's the cool thing? The cool thing is if the highs from last Friday actually get taken out inside the ES Mini, it's 2060, 250. This thing will just have recycled to another set of seventh inning stretch patterns out there. Most likely, that's what it will do. So these markets here, they want higher price. They need higher price out there. But actually, if you take a look at one other indicator, it's nothing more than that VIX index. And the VIX index is close, but no cigar to that 50-day exponential moving average. That 50-day exponential moving average is 1726. The high so far today, 1743. So long as the VIX trades below 1726, now it'll be a different number tomorrow and the next day because it's a 50-day exponential moving average out there. As long as it trades below that, the market will only do one of two things: move sideways to higher out there. And at this stage here, the idea is, and everything that we look at, is really to move higher. So that's what's going on inside of the markets. If we take a quick peek and see what's going on inside of the currency markets out here, that's your other liquidity gauge, the euro, Japanese yen. There is a chance today that it's trying to create some kind of reversal signal out here. That would bode well after it made a 1.272 expansion of its last set of swing points. So it made a butterfly pattern. I have to restart my charts out here. But in essence, what the euro Japanese yen did today was made a 1.272 butterfly pattern out there, and says that the euro could in fact have made at least a short-term bottom inside of the markets. Now, with regard to gold and silver, gold out here is off $13. It's trading out at $12.79. I don't recall if I covered this during this show or not. The CFTC every Friday afternoon at 3:30, they release their numbers that were as of the prior Tuesday. And as of last Tuesday, the commercial traders, presumed to be the smart money, the big boat, they have been upping their positions back to the same type of net short positions that have been associated with other highs inside of the gold market. Now, you can't use their data as a timing tool. What we can use as timing tools is the mere fact that the gold contract has made a 1.272, A to B equals CD to the upside. That has made a 0.786 retracement from its highs out there. So you've got a Gertley sell pattern. Inside of gold out here, you got a little bearish reversal signal on Friday, and you're getting follow through today. That actually says that gold could then begin to pull back. Where could it pull back to? I think that 1239 becomes a real nice target out there. I believe that's also the 0.618 level. And that would be a nice buy if, in fact, or maybe a nice buy if gold could do that. The reason, and also silver, the commercial traders actually moved to an even higher net short position than where it had made its last significant high out there. So, and if we take a look at the XAU, the HUI, we know that, let's take a look at the HUI. We know that they actually were the first ones to give some kind of a clue as to a problem with that key reversal session on January 21st out here. We've seen a couple of days, well, all 3 days since have been retracements. If we take a look at the retracement out here, really coming off of, we'll just say, I can't do it. This is frustrating. I'll have to do it on another tab, and I'll have to do it when I get back from the break. Maybe we'll just look at the GDX as the example. Right now, the Dow is up 5, S&P is flat, composite up 2 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up just slightly, about 2 points. S&P is also up just slightly. Same with the composite. Russell 2000 leading the charge here today at 5 points. DAX up 144 points out there, big time to the upside. Let's go back. We'll take a look at the GDX out here. And if we take a look at the GDX, the market vectors, gold miners, ETF, so it too made that key reversal type of session back out here on January 20th. I'm sorry, January 21st, I should say. 60 million shares shares up at the high. Now, backed off with 37 million the next day, 51 million shares on Friday. So far today, it's done about 12 million shares. We've been trading for an hour and a half. So that's a pretty good volume. That volume is similar to Friday's session out here. Now, because the candle's green, that doesn't make it bullish. That just tells you where price open and where it's trading right now. So the next target for the GDX is going to be about the $20.86 level. That's your 0.382 retracement. It's testing right now that 13-period exponential moving average. Does it get down to 2086? I don't know the answer to that question. But if it does and it's moving down with volume, then that says, hey, you're likely to see move down into the 0.618 retracement level, around $19.42 out there. And that's what's going on inside of the GDX. I noticed that Rand Gold was moving to the upside here this morning. So let's take a look at GOLD. It's a ticker symbol out here. And it made a high back here on January 21st with 1.2 million shares, backed off with 1.1 million shares on Friday. So far today, 500,000 shares. So this thing is, even though it's up a bit here, and that is a bullish engulfing candle, so to speak, Rand Gold itself won't pull all of the, in fact, it's more like you got to take a look at what's going on inside of Gold Corp, GG, which I think is still the #1 weighting inside of the GDX out here. So you've got Gold Corp that made a high with 16 million shares, backed off with 13, then 11 on Friday. So far today, about 3 million shares. So volume actually is a bit higher inside of Gold Corp this morning to the downside. That is coming into 20 and 24 million shares. You're doing 3 million right now. So it's coming in a bit lighter than that. Nonetheless, continued pullback inside Gold Corp. If we take a look at retracements from simply low to high out here, the next target is the 2196. So 2245, your TAS market profile low, 2196, your 0.382 retracement. No damage would really be done there, and no damage if it pulls back to $20.70 out there. Don't know. I'm not saying that's where it's pulling back to. One step at a time, one thing at a time. That's what you and I will do out here all day. So as we close out this session, it is Magical Monday. That means we got Basil Chapman. He's up next. Then after Basil, we've got Larry. Then we've got Daryl Martin, David White, and then Tom O'Brien from 3 to 5. The Dow just slightly, I'd say, as far as what are you going to focus on today, I'd say just focus on that VIX index. As long as it closes below the 50-day exponential moving average, you're in good shape to the upside. There is now nothing actually that I'm showing as signals that say the market will move to the downside. The currency market, which this is really all about, the Euro-Japanese yen, it's made a butterfly pattern. It's trying to create a bullish reversal signal today. Some additional follow-through tomorrow would say the move lower in that currency pair is over, and that would bode well for the U.S. stock market. There is no currency pair that tracks U.S. stock market better than the Euro-Japanese yen out there. You've got the energy sector, the XLE. That's up nicely this morning, up 64 cents out here. It is very possible that the energy sector is up off of the bottom. We know that the energy sector, I wish I could show you with my cursor out here, but it tested its low from December 16th, and it did that, I believe, with lighter volume as well. But I can't get my cursor back there to tell you that for sure. I'll have to do that tomorrow. So, folks, have a magical, marvelous Monday. I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.